Hi, I'm Selena. I have 20 years of teaching experience, and I'm a test prep expert with Study.com. In this video, we will dive into the FTCE Business Education 6 through 12 051 exam, focusing on the knowledge of accounting concepts and personal finance counseling programs. Key areas to help your students build strong financial foundations. Let's get started. In the context of double entry bookkeeping, which account would typically be credited when a company receives cash from a customer for a service provided? A, accounts payable, B, accounts receivable, C, cash, or D, service revenue. A, accounts payable is incorrect. This is the money the company owes to others, like bills to pay. B, accounts receivable is incorrect. This is money customers owe the company. C, cash. This is incorrect, as cash does increase, but in bookkeeping, increases in cash are debited, not credited. The correct answer is D, service revenue. In double entry bookkeeping, when a company receives payments for services rendered, the cash account is debited to reflect the increase in assets, and the service revenue account is credited to reflect the increase in the company's earnings. This entry recognizes the revenue earned from the customer. When analyzing a company's financial health, which item on the income statement would indicate the A, gross profit, B, earnings before interest and taxes, C, net income, or D, retained earnings? A, gross profit. This only shows profit after subtracting the cost of goods sold, not other business expenses. C, net income is incorrect. This is the final profit after all expenses, interest, and taxes. D, retained earnings is incorrect. This appears on the balance sheet, not the income statement. The correct answer is B, earnings before interest and taxes, or EBIT. EBIT is an indicator of a company's profitability and is calculated on the income statement before interest and taxes are deducted. It provides insight into the operational effectiveness of a company because it focuses on the profits generated from core business operations without the effects of financing and tax environments. Which strategy would most effectively help an individual improve their credit score over time? A, frequently applying for new credit cards to increase available credit. B, consistently making only the minimum payment on credit card balances. C, paying off credit card balances in full and on time each month. Or D, transferring balances to new cards to utilize introductory APR offers. A, frequently applying for new credit cards is incorrect. This can actually hurt your score because each application results in a hard inquiry and too many new accounts can look risky. B, consistently making only the minimum payment is incorrect. While it avoids late fees, interest keeps adding up and it doesn't lower your balance much. D, transferring balances to new cards is incorrect. This can offer temporary relief, but it doesn't solve the debt problem. The correct answer is C, paying off credit card balances in full and on time each month. This strategy demonstrates responsible credit behavior and can have a positive impact on an individual's credit score. Timely payments contribute significantly to credit scoring, and maintaining a low credit balance relative to the credit limits also helps improve a credit score. When evaluating different savings accounts offered by financial institutions, which feature is typically most important for maximizing the growth potential of deposited funds? A, the number of physical branch locations. B, the ease of linking to social media accounts. C, the annual percentage yield, APY, offered on the account. Or D, the availability of personalized checks. A, the number of physical branch locations is incorrect. While convenient for in-person banking, this doesn't affect how much your savings grows. B, the ease of linking to social media accounts is incorrect. This has nothing to do with banking or earning interest. D, the availability of personalized checks is incorrect. Checks are more relevant to spending. The correct answer is C, the annual percentage yield offered on the account. APY is the rate of return that is earned on a savings account. taking into account the effect of compounding interest. A higher APY means that the savings will grow more due to interest, making it a key feature to consider when choosing a savings account for the purpose of maximizing growth potential. Thanks for watching and working through some practice questions from the FTCE Business Education 6 through 12 051 exam. For more practice, strategies, and customizable study materials, head over to study.com and check out our FTCE Business Education 6 through 12 test prep course. Those who use study.com boast a 92% pass rate. With our resources, you'll know exactly what to expect on test day. Like this video and subscribe to this channel to get all the latest FTCE test updates. And please leave your questions and success stories in the comments. We would love to hear from you. Thanks for watching. Happy studying.